technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? the superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
It's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the fifth most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see, others too big to handle. Sometimes change feels slow, so slow we don't even notice. Other times it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Happy Tuesday, everyone. Live from the Bloomberg Interactive Brokers Studio in New York. Good afternoon to our audience on Bloomberg Radio and YouTube. It's Bloomberg Business Week on this Tuesday, September 7th, 2021. I'm Tim Stenovic. Carol Masser is off today, but joining me in her stead is Bloomberg News TV West Coast correspondent Ed Ludlow, live from our studio in San Francisco. Ed, good afternoon. Or actually, I guess it's still good morning to you there.
Morning, afternoon. It all blurs into one at the moment, Tim. Good morning.
Good morning, good afternoon, and hello to our audience worldwide. It's good to have all of you with us. A big show this afternoon. Today's big take, the barbarians at the gate of the fated UK pharma giant GlaxoSmithKline. Also a COVID update, of course. More than 1,000 people each day are dying here in the U.S. Hospitals are overwhelmed. But Israel's COVID surge can tell us a lot about what's coming next for us. Plus, this surge also derailing a return to office for the biggest banks in the U.S. Plus, BlackRock's China blunder. George Soros writes in a Wall Street Journal opinion piece that pouring billions into China, it's not only a bad investment, but also bad for U.S. national security. We're going to round out the show with Jerome Griffith, the CEO of Land's End, talking all most recently about the quarter, and also, of course, the holidays. It is not too early to start thinking about those, especially with some potential supply chain disruptions industry-wide. Also, Columbia Business School professor and former media investment banker Jonathan Nee joins us on his new book, The Platform Delusion. All that and more coming up in the next 3 hours. In the meantime, a check of the trading day with Charlie Pellet.
Hi, thank you very much. And here's what's going on. We're looking at a mixed market right now. The Dow, the S&P back to work Tuesday. They are lower. NASDAQ higher. The NASDAQ Composite Index at a record right now. NASDAQ up 29, gain there of 0.2%. For the year, NASDAQ now up by 19.4%. The S&P, by comparison, up by 20.5%. The Dow so far this year up 14.9%. Today, again, the Dow down 0.5%. S&P down 0.2. NASDAQ up 0.2%. 10 years down 11/32. 10-year yield 1.35%. Spot gold down 1.4%, $17.96 the ounce. And West Texas Intermediate crude down 1.5%, $68.23 a barrel. Gains in big tech stocks, including Netflix, Amazon, and Apple, pushing the NASDAQ 100 index higher. NASDAQ 100 up now by 0.2%. Netflix up 3.4%. Amazon up 1.2%. Apple shares up now by 1.5%. Recapping, stocks are trading mixed. NASDAQ at a record with the S&P down now by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get to the Market Drivers Report. With me now in the Bloomberg Interactive Brokers Studio in New York is Dave Wilson, stocks editor for Bloomberg News. Also joining us, Abigail Doolittle, markets reporter for Bloomberg News. Great to have you both with Ed and me on this afternoon. Dave, I want to start with you. Take us into what exactly is going on with today's trade. I mean, something that sticks out to me is the fact that if you look at the NASDAQ, even though it's at a record, it's higher by 0.2%. It's powered by the big tech companies because only 1,300 stocks are advancing while 1,800 are declining.
Yeah, and you're seeing a similar story with the S&P 500. You know, at the moment, there are 3 stocks down in the index for every one that's up. Nonetheless, the S&P 500 has come off its lows of the day, and it's down less than 0.2%. So, you know, that kind of fits in with what you're talking about, Tim. Any strength in this market looks pretty narrow at this point. You know, you look at the S&P 500, one stock that jumps out is Netflix, up more than 3% at the moment. We're reporting basically its optimism about the programs they're going to be rolling out over the next few weeks, kind of helping things along, analysts getting more positive on that company.
Dave, rising yields, but big tech leading the way. Square that one for us.
Well, you know, Ed, I mean, we've certainly seen the biggest technology companies hold up relatively well, even with, you know, bond yields kind of fluctuating the way they have. Now, you could go back a few months and people were certainly making the argument that, what you would see in treasury yields and what you would see in tech stocks would go together because, it would be a broader indicator of risk. If, yields are going up, then people are willing to kind of go out on a limb a bit more and, maybe own those technology companies and vice versa. That seems to have broken down lately, though. And we're really seeing, for the most part, the biggest technology companies reassert themselves. I say that looking at a screen that shows me Microsoft's off 0.3%, and Google's owner Alphabet is basically little changed on the day between their two classes of shares in the S&P 500.
Abigail Doolittle, come on in here and let's talk Bitcoin because it is sliding down more than 9%. It was down more than 17% earlier in the day. This on a day where El Salvador officially makes it a currency of the country. What's going on with Bitcoin today?
Well, it is really pretty extraordinary in terms of the degree of the decline, a crash. And there's an old market saying that market crashes, corrections, bear markets, they happen very slowly and then suddenly. And that appears to be the case here with Bitcoin on the day. As you mentioned, at one point down 17%, the worst day since 2020. And the fact that El Salvador is using it as its currency, you would think that would be constructive. But, Bitcoin largely trades off the technical. So once it went below the $50,000 per Bitcoin level and then the 200-day moving average, it has just really, plummeted. Some traders may be using that headline to push it in the direction that they want it, which today seems to be down after several small updates, really taking the crypto space with it. On big tech, I would make the point of Apple. Apple up, the biggest point boost, up 1.5%, having everything to do with that annual big Apple event day. Apple had not been up so much earlier, and that, I think, is really one of the reasons that you have the markets not down quite as much as they were earlier.
Let's be honest, Abigail. What's really driving markets this morning? I mean, there's nothing that exciting happening. We all wake up and think, great, we've had a long weekend, a holiday, let's get back at it. But, as you pointed out earlier to me, choppy trading, no real conviction out there today.
Yeah, Ed, it's interesting because earlier today, I would say around 10 o'clock East Coast time, the selling pressure felt real for the first time in a while. We've had a lot of these small days either to the upside or the downside in this summer melt-up, whereas it felt like some real summer selling pressure earlier. And I think that it probably did have to do with yields, even though big tech not pressured, and interestingly enough, the reflationary sectors to the downside, that pressure of rising yields on the horizon for investors seemed to be taking stocks down, but then that Apple announcement came out and stocks really came off the low. So it's interesting that markets can turn around with, the biggest weighting to each of the indexes.
It's so funny to hear that because as somebody who's covered Apple for years, I mean, there are a few things that are certain in life, right? Death, taxes, and then Apple is going to hold a hardware event every September, Dave. So
didn't they delay it last year, though, because of COVID?
Yeah, they delayed it a little bit, but I mean, it's still what they came out with a new iPhone and new hardware, just like they do each and every year. So was it that big of a surprise, though? I mean, it's certainly sending markets higher.
Maybe not a surprise, but just the idea of getting back to what passes for normal, especially when you think about what's going on in the broader technology industries. Chip shortages. That actually came up in PPG Industries decided to withdraw its forecast because its customers does a lot of business with automakers because it's in paints and coatings. They can't get the chips they need, and so therefore they're not buying as much from PPG. So, I mean, it's still out there, and the idea that Apple can kind of go ahead and do its usual thing in the face of what's happening more broadly, maybe that's enough to give people some confidence here.
You took the words right out of my mouth, Dave. That's my decliner for the day. PPG, a little deep tease for the closed simulcast that we're doing just at the market close. Dave Wilson, stocks editor for Bloomberg News in the Bloomberg Interactive Brokers studio. Also, Abigail Doolittle, markets reporter for Bloomberg News. A big thank you to both of you for joining us this afternoon. It's time now for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number is 1. Jill Biden will be the first Lady to leave the White House for a job when she resumes in-person teaching of English and writing at Northern Virginia Community College today. She's expressed a desire to see students in person after months of virtual lessons and will teach on Tuesdays and Thursdays, traveling on days when she's not in the classroom. I know she's not the only one who's eager to get back to the classroom as school gets back in session. Let's head now to Washington, D.C. for a latest with a check of world and national news with Nancy Lyons in the 99.1 newsroom. Hey there, Nance.
Hey, Tim. Well, President Biden, with flood-damaged Manville, New Jersey as his backdrop, says now is the time to act on climate change and pass an infrastructure bill.
Every part of the country is getting hit by extreme weather. And we're now living in real time what the country's going to look like. And if we don't do something, we can't turn it back very much, but we can prevent it from getting worse.
Biden's trip today to New Jersey and New York comes as lawmakers in Washington prepare to debate the president's $3.5 trillion spending plan for social issues spanning education, senior care, and climate change. Democrats aim to have the package wrapped up by the end of the month. A new Afghan government has been announced, and it is filled with senior officials from the Taliban and the leader of a U.S.-designated terrorist organization, the Haqqani Network. That may complicate any moves by the U.S. to cooperate with the Taliban, particularly as President Biden urges the Taliban to cut all ties with terrorist groups. Secretary of State Antony Blinken continues to answer questions concerning efforts to help Americans leave Afghanistan. He was asked about reports that some are not being allowed to leave.
It's my understanding that the Taliban has not denied exit to anyone holding a valid document, but they have said that those without valid documents at this point can't leave. But because all of these people are grouped together, that's meant that flights have not been allowed to go.
Blinken says it's a complex operation, especially since there are no U.S. personnel on the ground in Afghanistan. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenevec, and Ed Ludlow. I'm in the Bloomberg Interactive Brokerage Studio in New York. Ed Ludlow is our Bloomberg TV West Coast correspondent, and he's live in our studio in San Francisco. Ed, a handful of headlines about the coronavirus. And look, here's where we are right now. We are not where we thought we would be. We are back to wearing masks in offices around the country. Schools are already closed that have started. Kids are quarantining, and in-person learning is not necessarily back to where people thought it would be, where we were a few months ago.
Yeah, if anything, the momentum is going the other way. There's so much good reporting on the Bloomberg about the data, but actually the main takeaway from the stories I've read is those that have been left behind in the data. It's that very small portion of older non-vaccinated citizens, right, that are the concern right now in states like Florida, Louisiana, those states that reopen really quickly, somewhat buoyed by vaccination rates. But now the real pain point, the pressure point, is in those that aren't vaccinated and finding their way into a hospital bed.
Yeah, those states are currently still going through a really difficult time. The question is has Delta peaked in those areas, and where else is Delta going to go next? Some promising headlines, though, also crossing the Bloomberg earlier today. The United States reaching 75% of adults with at least one vaccine dose. So that means that 3/4 of U.S. adults have received at least one dose. That's as of today. The White House said that. That sets a new milestone in the country's fight against the pandemic. Still, though, with that surge of cases, hospitalizations, and deaths continue to increase. The Delta variant of the coronavirus is largely driving that. The president is planning a speech on Thursday to outline a 6-pronged strategy to get the pandemic under control. That's according to the latest from Press Secretary Jen Psaki. I do also want to get to a headline that Johnson & Johnson recently shot. A study shows that COVID infections halved in health workers. This data coming to us from South Africa. The company's COVID-19 vaccine cutting the risk of getting infected with the disease by about half. That's according to the latest results of a trial involving almost 500,000 health workers in South Africa. We're going to continue to dive into COVID over the next hour with more. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletier. It is a mixed Tuesday with the Dow, the S&P. They are both in retreat. Stocks are slipping from near records, but NASDAQ keeps on going, up another 31 points right now, up by 0.2%. Traders returning from a long holiday weekend are once again concerned that the economic recovery is faltering. Gains in big tech stocks today, including Netflix, Amazon, and Apple. That's helping push the NASDAQ 100 index higher. That index up now by about 0.3%. So NASDAQ Composite Index at a record, 10-year down 11/32, 10-year yield 1.35%. Gold down 1.4%, $17.97 the ounce, while West Texas Intermediate crude down 1.7%, $68.12 the ounce for WTI. Bitcoin is plunging as El Salvador becomes the first country to adopt it as a legal tender. Bitcoin down now by 11.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There's been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
It's Bloomberg's Big Take, the very best of Bloomberg's in-depth original reporting from around the world. And today, it's all about GlaxoSmithKline. It's one of the UK's most prominent corporations. It's a stalwart of the FTSE 100 with more than 94,000 staff and a long list of scientific achievements. But it's under attack by none other than the activist investor Elliott Investment Management. Joining us now is Susie Ring, healthcare reporter for Bloomberg News. She joins us on the phone from London. Susie, bring us up to speed. What is the attack that the company's 52-year-old CEO finds itself in?
So this harks back to April when it emerged that Elliott had taken a stake in GSK, which the company was not aware of until they contacted them, despite having talked to numerous investors and former employees the way that Elliott does. We know that the stake is in the billions. It must be under 5% though, because they haven't actually disclosed the exact amount. And then we had in July, they came out with this open letter with a list of their demands, one of which has now put the CEO in this slightly uncomfortable position where they're saying they would like to have a leadership process run before the company splits off its consumer division, which is planned for next year. Now, that has long been in train. Elliott agrees with that decision. They also agree with a lot of the strategic decisions that Emma Walmsley has made. However, they feel that the remaining company that will be left, which will be the pharmaceutical and the vaccines division, they feel that that may need to be led by someone with a bit more pharmaceutical and scientific experience, something that's not actually her background. But GSK is digging its heels in and saying, no, Emma is going to be leading it. That's the end of. So we're in this slightly strange stalemate situation where we're not sure over the coming weeks and months what Elliott is going to do or whether they're going to try and push harder on this.
Susie, for our global listeners, position GlaxoSmithKline for us, right? This is a stalwart of the FTSE 100. This is a titan of British industry. But for our global listeners, explain the history of this company and why Elliott is paying such close attention.
Absolutely. I mean, GSK is one of the two big pharma UK companies. But if we look further back, when it merged SmithKline Beecham and Glaxo Wellcome back in 2000, it was actually the world's biggest drug maker for a while. So, it's been a big pharma company on the global scene for a long time. And since then, it's had a number of significant achievements across its history. It was the first company to create the first treatment for HIV, for example, some of the first treatments for leukemia. It's a huge scientific development. However, in the last sort of 10 to 15 years, it's really lagged and just fluctuated with its strategy. It's had a couple of big drugs, but really not enough to kind of sustain it moving forward. And we've just seen it slip further and further behind other peers, most notably, I guess, AstraZeneca, given that AstraZeneca is kind of a closely aligned UK company, and Astra has just
gone through the roof. We've seen over the last decade Astra's market cap climb about 70% or more, whereas GSK's over the last few years has just climbed by double digits and doesn't seem to be picking up. What GSK is now trying to do, and this is what Emma Walmsley has been setting out since she took up the helm in 2017, is this strategy to spin off consumer, stop relying on that as a buffer for its revenues, and really plow into R&D and try and get these big hitters back and get it back on course. The question we have now is whether Elliott's going to allow her to kind of see to the end of that strategy and see it to fruition and actually follow that through as she gets to the point where that's about to be executed.
So, Tim, Susie, I've met Emma Walmsley here in San Francisco at the JP Morgan Healthcare Conference, right? And you wander the corridors of the hotel. This is where a lot of pharma healthcare deals get done. And the one thing is obvious. Emma Walmsley is a lone woman CEO, in an industry very dominated by men. Susie, you kind of touched at this point in your story, and it's something that Elliott has pushed back on, right? That this has nothing really to do with the fact that Emma is a woman. It has much more to do with her previous career background and simply the fact that she actually is not a scientist, right?
That's right. I mean, when she became CEO in 2017, she was the first woman to be appointed as a CEO of Big Pharma, which is obviously, crazy, right, given the time we're in.
Right.
But Elliott's come in, obviously, they're business driven. They're looking at it as a business prospect, and they see that GSK has a lot of potential, and they feel that it's been undervalued by the market and that there are steps that the company could take to remedy that. Now, the people we spoke to said that they were actually surprised when they made the investment that investors were slightly sour on her, and one of the reasons was that she didn't have this kind of strong scientific and pharmaceutical background. She's actually been at GSK since 2010, so she has the experience in a big pharma company, but her background is much more in marketing. She was at L'Oreal for about 17 years before she joined GSK, and she was very much on the consumer side of GSK until the point she became CEO. Now, GSK's response is she has hired the best people. She's hired Hal Barron, who is, a kind of scientific rock star in San Francisco circles, and he heads R&D. She's hired Luke Miles from AstraZeneca to run the commercial side of things. Again, very lauded, and actually someone that Elliott would see as a potential kind of internal rival to her to lead the company. And her point that she has made repeatedly is, you don't need to have a scientific background to be a CEO. You're a business leader. You're there to run the business. And if you know and you have the right people by your side, that shouldn't stop you. We've seen other examples. Ken Frazier at Merck, not a scientist. He was a lawyer. Paul Hudson at Sanofi, not a scientist. He has an economics background. So that just raises the question, obviously, further, that she is a lone woman. Is there any element to it? And we're not saying, as I say, this is driven by Elliott's business decision.
It's a fantastic...
But it's been an issue that's been raised.
Susie, we unfortunately have to leave it there. It's a fantastic piece. Check out Susie Ring's story and more from Bloomberg's The Big Take. It's on the Bloomberg and, of course, at Bloomberg.com. It's Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec live in the Bloomberg Interactive Broker Studio, along with Ed Ludlow, Bloomberg West Coast correspondent, joining us live from our San Francisco studios. In just a few minutes, we are going to talk all things COVID. We're going to talk about the overwhelmed hospitals here in the U.S. and why what we're seeing today is a far cry from what we saw just a few weeks ago, as it felt like we had really turned a corner on this pandemic. Drew Armstrong, senior editor for U.S. Healthcare, is going to be joining us in just a few minutes. In the meantime, let's get a check on the latest when it comes to the trading day. Charlie Pellet is standing by.
Hi, thank you very much, Tim. Lower across the board right now with the Dow, the S&P, both on the minus side. NASDAQ pushing higher. The NASDAQ Composite Index at a record up 19 right now, up 0.1%. But the S&P is down 12, dropped there of 0.3%. While the Dow Jones Industrial Average down 228, down 0.7 again. The S&P is down by 0.3%. Stocks slipping from near records. Traders returning from a long weekend to worries that the economic recovery is faltering. The 10-year down 11.30 seconds. 10-year yield 1.35%. Gold, spot gold down 1.4%, 17.97 the ounce. West Texas Intermediate crude down 1.3%, 68.38 a barrel on WTI. 3/4 of American adults have received at least one dose of COVID-19 vaccine as of today. That's according to a White House official, setting a new milestone in the country's fight against the pandemic. The U.S. hit 70% of adults with at least one dose in early August, 4 weeks after President Biden's July 4th target for the achievement. Now, as for the broader COVID picture across the country, Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security.
What we've seen is kind of a two-track pandemic, the pandemic of the vaccinated and the pandemic of the unvaccinated. And the pandemic of the vaccinated is not really a thing. And what we've developed now is a regional threat from COVID-19, and it's not the same systemic threat that it was. So ICUs, for example, in the Northeast or Pittsburgh, where I work, are in a very different position than an ICU in Texas or an ICU in Mississippi. And that has to do with how many high-risk people have been vaccinated or have immunity from natural infection.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the big-name vaccine stocks that we follow, Pfizer shares down now by 0.5%. Its German partner BioNTech, its ADRs up 2.4%. ADRs of AstraZeneca down 0.9%. Moderna out of Boston up 4.8%. J&J, Johnson & Johnson down 1.8%. Again, recapping, S&P down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the fast-spreading Delta variant, it's flooded hospitals across the South. It's killed more people in Florida and Louisiana than the darkest days of the pandemic winter and left so many COVID-19 patients gasping for breath that some places face shortages of medical oxygen. So write Jonathan Levin and Michael Smith in their latest story for the Bloomberg terminal, available at Bloomberg.com as well. Overwhelmed hospitals belie U.S. illusion of a defanged pandemic. Drew Armstrong is senior editor for U.S. Healthcare for Bloomberg News, and he joins us now on the phone from New York City. Drew, how did we get here?
Well, I think we've been in this situation where you have many parts of the U.S. vaccinating quite aggressively, but many parts that didn't. And when you look at down south, a lot of rural areas, those were places that had not been hit nearly as hard early on by COVID. And then you have this kind of perfect storm combining a much more transmissible and by some reports more dangerous variant of the virus, low rates of vaccination in those places, and a population that probably didn't have necessarily as much kind of previous naturally acquired immunity, because these are a lot of places that some of these places had been hit by quite hard, but there were still a lot of places in the country that had not really been slammed by COVID. You mix all of that together, and it's a pretty toxic brew.
Drew, the data in the story seems to suggest that even with an orderly vaccine rollout, like reflects, what happened here in San Francisco. We started with those over the age of 70, then down to 65. But what seems to be happening, particularly in these southern states, is that there are sections of those age groups that just didn't, for whatever reason, get vaccinated, and that's where the pressure point seems to be in terms of hospitalizations. What's going on there?
Yeah, you have higher levels of vaccine, either refusal or reluctance, kind of across the board in a lot of these places, and the result of that is your over 75 population is less vaccinated, your over 65 population is less vaccinated, your over 18 population is less vaccinated. So you just leave more vulnerable people in play there. And obviously, especially with some of those older groups or people who have pre-existing medical conditions, you talk about obesity, diabetes, those people are really at risk of this virus. I mean, if you look at how who this virus impacts, if you're older and in ill health or, just in ill health, you are really profoundly at risk. Most younger, healthier people, there are exceptions to this, obviously, but are at far less risk of this. It can be, quite nasty and unpleasant, but, you don't see as many of the terrible health outcomes as you do in a lot of these older populations. And that just means kind of, more kindling for this thing to burn through.
So, Drew, how does this end? Because here we are in September, kids are supposed to be back in school. Many parts of the United States, they're already not as a result of being quarantined or the spread of the virus among those classrooms. How does this end?
Well, I think the way it ends is some degree of immunity, either through vaccination or through previous infection, and this pandemic probably burns itself mostly out, and we move into kind of an endemic phase where we have pockets of infection and flare-ups and kind of a constant low-grade COVID out there. The one thing I'll say is that since this does seem to be a point of discussion out there amongst some groups, the vaccines are kind of a shortcut to immunity. Yes, you can get naturally acquired immunity, but you have to get sick to get it, and that comes with some significant risks. I think, as we've seen, as we had more than over 500,000 people dead of this disease in the U.S. So, people talk a lot about viruses as wildfires, and they tend to go until you've burnt through all of the flammable brush that's out there.
Hey, Drew, we only have about 30 seconds left on this. I just want to get an idea from you about sort of the next catalyst we should be looking for to see if Delta has indeed peaked here in the U.S.
I think what I'm personally watching is a lot of state and regional maps, looking to see, trying not to think about this as a U.S. outbreak, but really thinking about it as a state and local one, and keeping a close eye to see, okay, has it peaked down south fully? Is it rising, or is there a ceiling on cases in some of the states that have vaccinated more heavily or that have not been kind of forced indoors because of the heat? And then really paying attention to what happens with the holidays.
The holidays, already thinking about that and trying to make those plans, those right around the corner. Drew Armstrong, senior editor for U.S. Healthcare for Bloomberg News, joining us live on the phone from New York City. Well, let's get a check on the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. President Biden says the world is running out of time to address climate change. Today, he's been touring New Jersey and New York neighborhoods recently hit by the remnants of Ida.
I think the country's finally acknowledged the fact that global warming is real and it's moving at an incredible pace. And we've got to do something about it.
The Biden administration is asking Congress for billions of dollars in emergency funds to cover costs associated with the recent hurricanes, wildfires, and the resettlement of Afghan refugees. The heads of 3 of the world's largest Christian churches are joining together to call for action on climate change and social inequality. Bloomberg's Nathan Hager reports.
Pope Francis, the Ecumenical Patriarch Bartholomew of the Eastern Orthodox Church, and the Archbishop of Canterbury have issued a rare joint statement saying climate change is the result of human actions, and in their words, today we are paying the price, tomorrow could be worse. This statement comes ahead of United Nations-led climate talks coming up this November in Glasgow in a summit known as COP26. In Washington, I'm Nathan Hager, Bloomberg Radio.
South Lake Tahoe residents continue to stream back to the resort town after being evacuated last week when the Caldor fire continued to advance. Thanks to easing winds, crews have managed to make progress by bulldozing defense lines and airdropping lake water onto the flames. They've contained more than 44% of the perimeter. Authorities, though, are still warning residents they could be at risk from the smoky, foul air and displaced wildlife, especially bears. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that update, Nancy Lyons. Tim Stenovec and Ed Ludlow live in the Bloomberg Interactive Brokers studio. I'm in New York, and Ed Ludlow is joining me from San Francisco. Ed, I'm looking at the chart right now on the Bloomberg terminal for Bitcoin. Bitcoin was lower, had a drastic sell-off earlier in the day, down more than 17% from its earlier highs, but now down only 9.1%. All this, Ed, on a day when El Salvador is rolling out the official as the official currency.
I've really just stopped looking at Bitcoin in one-day isolation snapshots. It's so hard to follow, partly because of the 7-day trading, right, over different time zones. You know, look at 1 month, we're back to where we were sort of early August. What I love about the news flow around Bitcoin is no one's really clear if this is sort of institutional investors and countries driving momentum behind Bitcoin or it's retail traders. You have two different stories today. El Salvador struggling to implement Bitcoin as a legit currency. You see the market fall, and then you have Coinbase at the same time saying transactions are not going well for some users on the platform, also giving downward pressure. But it's really hard to quantify which of those is the main driver.
Yeah, I think it's a really good point, and I think what we do tend to see when there are movements in Bitcoin is they can be very quick and very fast and very sudden and then come back, just like we saw earlier today. What you're referring to is Coinbase saying that transactions are encountering issues at higher rates, and indeed earlier in the day we saw, which we do see Coinbase oftentimes move with the price of Bitcoin, Coinbase lower as well. I do wonder to what extent other countries are watching the rollout in El Salvador to see what it means for whether they could potentially adopt it as a legal tender or as a cryptocurrency.
Yeah, and for El Salvador in particular, this is really about remittances. It's about people who are usually spending US dollars, right, and need a sort of better, more efficient, fair way of transferring money or spending money in their own country, but also across borders.
Yeah, it's a really good point. Remittances and the fees that are among the remittances account for a significant, or I should say remittances account for a significant portion of GDP in the entire country. This is Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story headline from the Bloomberg Professional Service. Ford hiring the head of Apple's car project away from the iPhone maker. This, according to sources. That hire will be a coup for Ford, which has made major strides under Chief Executive Officer Jim Farley in convincing investors that it can compete with Tesla and others on electric vehicles and technology. Again, the headline worth repeating here: Ford hiring the head of Apple's car project away from the iPhone maker. Ford shares up now by 0.6%. Apple shares up by 1.6%. NASDAQ continues to trade a record. It is a down Tuesday for both the Dow and the S&P. Stocks slipping from near records. Traders returning from a long holiday weekend to worries that the economic recovery is faltering. S&P 500 index down 10, drop now of 0.2%. The Dow down 221, down 0.6. NASDAQ up 22, a gain of 0.1%. 10 years down 12.30 seconds. 10-year yield right now 1.36%. Gold is down $26 the ounce, down 1.4%. West Texas Intermediate crude down 1.4%, 68.36 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the payphone, an iconic image of the payphone. Just think about what an image of a payphone or what a payphone evokes to you. For so many years, it was the only way for any of us to communicate with one another or actually even be reached. But nowadays, it's rare with the advent of the smartphone and the cell phone that they're even used. Well, David Dudley, a writer for Bloomberg City Lab, who joins us now on the phone from Baltimore, profiled a photographer who's working to document surviving payphones that are evoking a lost U.S. network of 2 million. David, it's great to have you on the show. Tell us about the photographer's project documenting thousands of these abandoned payphones.
Thanks for having me. So I spent the day with a gentleman named Eric Kunzman, who is a photographer and a photography professor in Rochester, New York. And a couple of years ago, he became sort of fascinated by the fact that it seemed like the neighborhood that he had moved his studio to was full of payphones. And he hadn't noticed that in other parts of town. This is sort of a lower income part of Rochester. And he started to sort of take images, portraits of the payphones that he saw in the neighborhood, usually in front of convenience stores and gas stations. And this sort of expanded into this sort of a global quest that he has launched to document every single payphone in Monroe County, New York, and also any place else, basically, that he happens to see payphones. He's become sort of fascinated by what they symbolize.
I'm a Londoner, right? I think phone box, I think iconic red phone box, I think tourism. But as part of this process, what do you learn about any neighborhood's given phone box? What does it tell you about the economy, about the people in that place?
Well, Eric sort of theorized that some of these phones were basically just sort of forgotten. They'd been sort of installed in the 90s or earlier, and because no one had renovated the building that they were attached to, or no one had bothered to call the phone company and say, hey, could you remove this thing? The machines themselves had sort of persisted. So it was sort of like a geography of the more sort of economically left behind parts of the city. And as part of his project, he sort of mapped all the phones across the county and overlaid that with economic data and other information. So he became sort of interested in sort of what the whole kind of social kind of geography of telephones meant, which sort of made this more than just sort of an aesthetic project. It was sort of a social documentary.
I do find that the idea that this is based in Rochester, New York, just fascinating. As you point out, it was the home of George Eastman, the founder of Eastman Kodak. And at its 1970s peak, the photography giant employed about 50,000 people and fueled a quarter of the city's economic activity. It's absolutely a different picture in this day and age, David. And I'm wondering the juxtaposition of that and the symbolism there, that this project is being done on film, first of all, in a place where Eastman Kodak was for so long a stalwart of the economy.
Yeah. No, I mean, that's sort of part of the conceit here is it's sort of this convergence of obsolete technologies that Eric really still finds value in. He is a film photographer diehard. He has sort of a shrine to Kodak film in his studio. So he's shooting these things on an old Hasselblad camera on film, using this product that is so associated with Rochester and with the wealth that sort of built the city. And it's sort of part of his sort of thesis that there is value in things that might not be cutting edge technology anymore, but are still useful and still serve different people.
Really encourage.
Yeah, exactly.
I was just saying, David, I really encourage Bloomberg Radio listeners to go on Bloomberg.com onto the Bloomberg terminal and look at the actual photographs themselves. As Tim said, shot on film. But there's something missing from every single photograph. There are no people in any of the shots at all. Why is that?
Yeah, that's on Eric's part. He didn't want you to sort of think about who was using the phone. He wanted you to sort of leave that to your imagination. Because really, and those of us who are of an age when we used payphones more regularly in the 80s and 90s, it was a public amenity. Everyone used the payphone. And now it's sort of perceived as something as a communication device of last resort for people who really have no resources. And he really wanted you to sort of think about who might need that phone. And so it's this sort of gallery of unpeopled landscapes where you sort of see the phone as part of a kind of a streetscape. But yeah, there are no people there. They're used sometimes. He's got data from the telecom that still operates them that says that that most of these phones are used a couple times a week still. The handful that are still working, a lot of them are just sort of corpses. Their handsets are broken, or the insides have been removed. But some of them still work, and those that do still do find people who need to use them.
What did the company that oversees these phones, that these phones belong to, Frontier, tell you about the status of the phones?
It's not really a priority for Frontier Communications right now. This is a telecom that is, pivoting to fiber optics and, cutting edge technologies. But it also happens to have about 1,500 of these phones scattered around the county. A spokesperson told the last reporter who did a story on this that they're still maintaining the ones that are when they get a call to fix up a phone, they'll still send someone out. It's unlikely that it's a major profit center. Let's just say it's a very, very declining business. There are less than 100,000 payphones across all of the United States, probably a lot less. And it's very much a part of the telecommunications business that has really been left in the past.
David, very quickly here, what was your takeaway? I mean, look, you can't see me. I'm holding my cell phone in my hand. I'm rarely ever detached from it. I can't live without my cell phone. But is you going through that experience, driving around neighborhoods, how did it make you feel?
It's like a time capsule. It's like as you're driving around, and I grew up near Rochester, and I know the area pretty well, and you have to kind of pretend that it's like 1990s, and you sort of have to think in those terms, and you sort of squint, and then suddenly you can see, oh, there's a payphone attached to that gas station, and it's kind of an interesting experience to sort of become aware of this furniture that used to be so omnipresent on our streets, and
Peak pictures. David's story is featured in the Cities issue of Bloomberg Businessweek magazine. It's available on newsstands and at Bloomberg.com/businessweek.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday. We've got the Dow, the S&P lower, NASDAQ 100 index, both advancing right now. Right to the numbers. We'll give you the why in a moment here with the S&P down 8, a drop of 0.2%. The Dow down 210, a drop of 0.6%. NASDAQ higher by 31. The NASDAQ Composite Index up 0.2%. NASDAQ 100 index up 38 points, up by 0.2%. We are looking at records for NASDAQ. 10 years down 14.30 seconds, 10-year yield 1.36% right now. Spot gold down 1.5%, 17.96 the ounce. And West Texas Intermediate crude down 1.3%, 68.39 a barrel. Stocks slipped from near records. Traders returning from a long weekend to worries that the economic recovery is faltering. As for that economic backdrop, Megan Green is a senior fellow at the Harvard Kennedy School.
The big question remains whether there's going to be inflation, and sustained inflation or not. And that question hasn't been remotely answered. There are data points supporting both sides of that story. We were all hoping a couple months ago that come September, kids would go back to school, we'd all go back to the office, events would happen in person again, we'd be traveling again, and that's clearly not happening.
Sources tell Bloomberg Ford Motor is hiring Doug Field, the head of Apple's car project, away from the iPhone maker. Losing Field would be a blow to Apple, whose car project has gone through several strategy and leadership shakeups since it started to take shape around 2014. Apple shares, they're up now by 1.7%. Ford shares up by 0.4%. European playmaker Airbus had its best month for jet orders since January of 2020. Airbus's ADRs, they are down 1.1%. Boeing shares down 1.7%. Recapping stocks mixed, S&P down 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Okay, so masks are back on at Citigroup, and at Bank of America, workers still have to keep their distance in conference rooms. At JP Morgan, investment bankers and traders can no longer blow off steam at the nearby Monkey Bar, that's the Tony restaurant in Midtown Manhattan, that closed during the pandemic. So writes Jenny Serrain, who says that Wall Street is back, just not the way that industry executives had hoped. Jenny joins us now in the Bloomberg News Interactive Broker studio in New York. She's finance reporter for Bloomberg News. So Jenny, a few months ago, this was supposed to be a completely different story. The Tuesday after Labor Day was when things were supposed to be back in full swing. Give us an update from what the big banks are doing.
Yeah, that's exactly right. So today was really supposed to be Wall Street's big back-to-school day and kind of the start of Wall Street's new normal, and we just haven't seen that really take shape. You know, you've got a lot of smaller Wall Street firms actually pushing back their dates, saying, you know what, we're just going to do this in October, November, maybe next year. And then the biggest guys, they are still very adamant. They want their folks back at their desks. They're increasingly having those folks there. And really, they're just, it's just not the way they pictured it. The mask, the social distancing, all the rest, it's just not what they wanted.
You guys kind of set it out, Jenny, right? There's no one-size-fits-all return to office COVID plan. But I guess the trend does seem to be the big guys want you back at your desk. The smaller firms, more cautious approach, pushing things. You know, Wells Fargo's pushed back a couple of times. But why is that? I mean, is it just the spending that was required on protection mechanisms? It's just psychology? You know, what's behind that difference?
Yeah, it's a really good question. I think for each firm, it might be different. So I think some firms are using this as an opportunity to recruit away from the big firms and saying, you know, people want flexibility. We're willing to give you that. In some cases, it's more about, you know, some of these bigger banks have staff in places like Texas or Florida, Georgia, places where vaccination rates are way lower than here in New York. And so that's kind of complicating how quickly or how many people they can bring back. So I think lots of things could be driving it. Definitely spending on making the offices safer. It's a big expense. And if you see a lot of your employees are really hesitant to be back, you might say, you know what, we'll wait.
You kind of mentioned in your story, but out west this way, there's this play by the tech companies, right? They keep pushing back. They give more flexibility, particularly in the engineering department. And you mentioned in the story that there's some crossover there, right? There's a flow of talent from Wall Street into big tech and vice versa sometimes. But the point is you have to give the people what they want. What's going on with this just indefinite delay from ever going back to the office?
Yeah, I think engineers on Wall Street are a very special breed. They seem to be the only ones that are getting this special dispensation from CEOs who are really aggressively bringing a lot of their workers back, but they're very hesitant to do anything that will upset the developers and engineers and everyone that kind of keep the technology of Wall Street going. And that's because, competition for that talent right now is at levels that these executives haven't ever seen, and they are very aware that places like Google and Facebook are rolling out the red carpet for these folks and really trying to keep those folks happy and keep them in their jobs.
I wonder about that in the other ranks of employees too, because it's not just that these banks are competing with the other banks for talent; they're also competing with tech companies that perhaps have different types of work from home policies and more relaxed policies. And I'm wondering what you're hearing from your sources, Jenny, about whether or not banks are starting to think differently about being more lenient with this stuff, because from a competitive perspective, they may have to.
Yeah, I think so many of these CEOs are it's like a CEO thing. Like, so many of these CEOs just feel strongly that culture is built in the office and that younger employees especially need training, and they want to see folks in their seats every day. And so I think you've got a little bit of what do the people want versus what does the person at the top of the house want. And that's a really hard balance. And I think you're seeing it play out at all these different firms in slightly different ways. But ultimately, I do think in a lot of cases, what the CEO wants is ultimately going to win out.
Irrespective of where they're working, Jenny, how are they working? Is it's been a purple patch for these firms, or is part of the sort of impetus to go back to the office that they need to do better, to get some energy going amongst the workforce?
Yeah, what's interesting about the trading floor specifically is we keep hearing from traders that on slow trading days, it's really helpful to have folks in the office. You've got that water cooler chat, you come up with random ideas, you go out, you pitch it to clients. That sort of like organic conversation is really hard to pull off on Zoom and in virtual meetings and things like that. So certainly for the traders, I think that you see a lot of those folks are kind of eager to get back at least part of the time, and that they think it will really help their results. I mean, for the rest of the bank, they're at record profits, and it's kind of hard to say that they're doing poorly in this remote work time. But certainly for the traders, you do see them starting to get a little antsy, especially as we've had a few of these like summer doldrums these past couple of weeks.
Yeah, well, the summer season is certainly over now. I mean, officially over. We are the first Tuesday after Labor Day, so this is the time when fall officially kicks off. Jenny, I'm wondering really about how the timeline has changed now that this goal, and I know the goalposts move, I understand that this is an evolving situation, but what are the banks saying about, okay, we are back to normal, on this date?
There's not really one new universal date like there was with this. So I think we're going to see it really be low and slow. The biggest U.S. banks have brought a lot of their folks back or are planning to do so this month. So you're definitely seeing that push. But I think for a lot of these smaller firms, they're just hesitant and they're playing it by ear. Especially with schools and that situation being as uneven as it is, that also makes it really hard for you to kind of say, all right, we have to be back in, especially, with folks with kids under 12 whose kids can't even be vaccinated. That just makes everything so much harder and just not the moment in time that Wall Street thought it was going to be.
Jenny, very quickly, what's the next big name to watch for? Which bank moves next? Which trading floor firm moves next to bring their teams back?
I actually think the two banks to watch would be Citigroup and Bank of America. So they're planning to bring back more and more of their folks this month. So it'll be kind of interesting to see how that plays out and kind of how their employees react here.
All right, Jenny Serrain, we are going to have to leave it there. Finance reporter for Bloomberg News. She joins us in the Bloomberg Interactive Brokers studio in New York. Check out Jenny's story. It's available at the Bloomberg Terminal and, of course, at Bloomberg.com. It's called Wall Street Limps into Post-Labor Day Return Derailed by Delta. Ed, as Jenny said, this was supposed to be Wall Street's back-to-school day. It's not necessarily turning out to be.
Yeah, it's all about the psychology. Home in your shirt upstairs, sweats downstairs, or what do you do? I don't know.
Well, you can join by Zoom in many places, but no, we'll see how long. This is Bloomberg Business Week. Let's get a check of the latest world and national news. Nancy Lyons standing by with the latest in D.C. Hey, Nance.
Hey, Tim. Texas Governor Greg Abbott has signed an election integrity bill after a battle with Democrats there that sent many of them fleeing the state to delay a vote on that bill.
It does make it easier for people to be able to go vote. No one who is eligible to vote will be denied the opportunity to vote. It does, however, make it harder for cheaters to cast an illegal ballot.
Abbott says he does expect legal challenges. The measure was a top priority for Abbott, even though there's no evidence voter fraud took place in the 2020 election. The bill does roll back early voting and adds new voter ID requirements. Critics say the law disproportionately impacts voters of color. The Justice Department has announced it will protect women seeking an abortion in Texas.
Attorney General Merrick Garland says violence against anyone who is trying to obtain an abortion in Texas will not be tolerated as the agency continues to explore its options. The new Texas law prohibits abortions once medical professionals can detect cardiac activity, usually around 6 weeks, before some women know they're pregnant. Courts have blocked other states from imposing similar restrictions, but the Texas law differs significantly because it leaves enforcement up to private citizens through lawsuits instead of criminal prosecutors. In Washington, Ann Cates, Bloomberg Radio.
Mexico's Supreme Court has voted unanimously to decriminalize abortion. It's quite a development in a country where that has the world's second largest Catholic population. Mexico is seeing a growing women's movement, with female politicians making up half the nation's Congress. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenovic in the Bloomberg Interactive Broker Studio, joined by West Coast correspondent in San Francisco, Bloomberg News' Ed Ludlow. Ed, I want to let you run with this one because this is a story that you worked on. Ford hiring away Doug Field from Apple. As a result, shares of Ford are higher. What's going on there?
Yeah, it's a really interesting story. But for both Ford and Apple, for Ford, it's a massive coup. The company now confirming that Bloomberg scoop. Ford shares are in negative territory, raised their losses, now up 1%, which shows how significantly investors put this. But Doug, before he joined Apple, was a Tesla executive for 5 years, vice president of engineering, and he really put Apple's potential efforts in the world of electric vehicles on the map. They gave him a title as special projects lead or something like that, because Apple keeps everything so under wraps. But as you know, Tim, Ford has invested so heavily itself in electrification and in autonomy and in digital products to go with it. So this is seen sort of as a really big win for them as they venture deeper into that area.
Hey, Ed, what does it mean for a company like Apple that for years has been working on a car? I mean, don't forget Project Titan years ago, right? And then Apple's reset of what it's doing with its car. What does it mean for the big company?
Well, it's been a bit of a merry-go-round. A lot of people have come into Apple and then departed. They haven't had that much continuity on the team. They've made some very high-profile hires from names like NIO, like Tesla. It's still a completely secretive project. You'd imagine that losing the head of the project, Doug Field, to an automaker, a potential competitor like Ford, is significant for them, right? It puts question marks on the progress that they've made to date, not just in electric vehicle, but also their work that we know they're doing in autonomy as well. So we'll look to see who they bring in next and who kind of steadies the ship there.
So just in the last 20 seconds that we have, Ed, what are you watching for from Ford as far as what Field will be working on?
Just volume rollout of new products. The Mustang Mach-E is great. I've driven it. F-150 Lightning, the electric pickup's going to be great. But really, they're pinning a lot of hopes on how they make money from the things associated with EVs, digital services, charging, things like that. What innovations does he bring?
All right, we'll have to keep an eye on that. This is Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A down day for the Dow and the S&P, but another record for the NASDAQ Composite Index. Let's head right over to the First Word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed today with the Dow under pressure. Dow's currently down 237 points. S&P's drop 11, and NASDAQ is higher by 25. The U.S. 10 yield at 1.37%. Gold is down 26. Transports fall 55. And Bitcoin had a wild session, falling as much as 17% before paring losses. Among the main 11 S&P sectors, only consumer discretionary, telecom, and tech were in the green. Industrials and real estate were under pressure. And leaders to the upside in the Dow, Disney and Apple, while 3M, Amgen, and Honeywell led to the downside. In deal news, TCI threatened a proxy fight against Canadian National unless it drops the Kansas City Southern bid. And in other news, IronNet soared as much as 80% on the day after being touted on Reddit and StockTwits. It's now up just 19%. And wrapping things up, Netflix gained as much as 4%, breaking out to an all-time high. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over at your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Quote, it's likely to lose money for BlackRock's clients, and more important, will damage the national security interests of the U.S. and other democracies. Those are the words of legendary investor George Soros criticizing BlackRock for investing in China in an op-ed in the Wall Street Journal today. Joining us now to talk all about it and more, there's pretty much no better person to speak to this than Andy Brown, editorial director of Bloomberg New Economy Forum. Although he spent years in China, today he is joining us on the phone from New Hampshire, and we're certainly glad, because if he were in China right now, it would be the middle of the night. Andy, thank you so much for taking the time and joining us on this. What was your reaction when you saw that? What was your reaction when you saw that editorial from George Soros?
Yeah, look, this is pretty inflammatory stuff. I mean, he's essentially accusing Wall Street leaders of being unpatriotic, almost fifth columnists, investing, as it were, in the enemy at a time when the United States and China, in his view, are locked in this life and death struggle for supremacy. And his point is, you've got to choose sides. This is a national security risk. I mean, certainly he's gone further in his criticism of people like, Larry Fink and Schwartzman and John Thornton, the former Goldman Sachs senior executives, than perhaps any senior public figure has before.
Good afternoon, Andy. I mean, what is the concern here? Is it complete focus on the regulatory crackdown? Or is it the President Xi economic strategy, which is largely a shift to industrialization, right, away from software, away from internet? Where is the area of concern for Soros?
Well, no, I think he's looking at this at a much higher level. I mean, in his view, you now have two competing and incompatible systems vying for global supremacy. And on the one hand, you have the democratic free market system of the U.S., Europe, and the West more generally. And then you have China, which in his view is moving in an authoritarian, even autocratic direction, and doubling down on state capitalism. And that certainly is the way that he would interpret the latest ructions in China, with Xi Jinping taking on the big tech champions. He would no doubt see this as being an effort to strengthen the state and tear down the private sector. But it's very interesting that you now have real divergence of views within the investment community on what on the significance. I mean, you have other people like Ray Dalio saying now's the time to invest. Xi Jinping is doing exactly the right thing. He's sorting out problems in the tech economy, problems that we all grapple with, including in the U.S. And that China, and that, in a sense, Xi Jinping's actions should not just be supported, they're laudable, they should be applauded.
Well, Andy, paint us a picture of China today, China 2021. Where does it sit ideologically? Where does it sit in its economic story?
Well, this is what's to play for. I mean, we don't really know. I mean, Liu He, who runs the Chinese economy, who came out just the other day to saying this isn't at all an attack on the private sector. The private sector is responsible for 60% of GDP and 80% of all new employment. This is all about rationalizing, or this is all about getting rid of abuses in our system, leveling the playing field and making society more equitable. And there are a lot of people, as I say, including people like Ray Dalio, who take all this at face value.
Andy, as you write in New Economy Saturday, what began as a regulatory takedown of Jack Ma, the flamboyant Alibaba co-founder, it quickly grew to an assault on tech platforms, including those like Tencent that offer online gaming. You ask the question, is this a new cultural revolution? Is it?
Yeah, well, you know, there is a very hard-edged ideological element to all this. And what you're seeing are these really eerie, rather sinister echoes of the Cultural Revolution, both in the language. There's a lot of talk now of struggle. There's, you know, a lot of talk about rectification. You know, these are words and concepts that were very common in the early years of the People's Republic, and of course during the Cultural Revolution. And then you have this sort of very powerful symbolism, the cult of personality. And I was noting that, you know, Xi Jinping's thought has now become a part of the school curriculum. Right. Everybody from age 7 up all the way through university is going to have to study Xi. And as The Economist magazine pointed out, the last time hundreds of millions of Chinese school kids had to read the thoughts of one man was indeed during the Mao era, during the Cultural Revolution.
Andy, just in the last 30 seconds we have, what is Xi Jinping thought?
That's a very good question, and not having been through the syllabus, it's hard to answer in a word. But we have to take this very seriously. This is not a temporary squall. Something very serious has shifted in China, something very profound. And investors who think that they're going to play this as they might play any market trend are going to get quite badly burned.
Yeah, hence the op-ed from George Soros in today's Wall Street Journal. Andy Brown, editorial director at Bloomberg New Economy, joining us on the phone from New Hampshire. Andy, it is always great to chat with you. Thanks so much for taking the time. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Tim Stenivek live in the Bloomberg Interactive Brokers Studio in New York. And in just a few minutes, Dave Wilson, stocks editor for Bloomberg News, is joining us live to give us, of course, the chart of the day, the stock of the day, and, of course, the song of the day. I'm on my own for that one, so we'll see if I have any chance with it. Dave is not shaking his head. He's not nodding his head. He's kind of saying, maybe I'll get it. Well, we'll see in just a few minutes. In the meantime, a check of the latest when it comes to trading day. Here's Charlie Pellet.
Hi, thank you very much. We've got 28 minutes to go ahead of the closing bell. The Dow, the S&P remain lower. They've been that way all session long. NASDAQ, though, advancing. Could see a record there. Let's begin with the numbers. We'll give you the why in a moment. NASDAQ up 18 right now at 15,380 for the NASDAQ Composite Index, a gain of 0.1%. The S&P is down 12 right now, a drop of 0.3%. The Dow is down 246, a drop of 0.7%. Right now, we've got the 10-year down 15.30 seconds, 10-year yield 1.37%. Gold down 1.6%, 17.94 the ounce, and West Texas Intermediate crude down 1.4%, 68.35 a barrel. The Dow and the S&P 500 index both are declining. Gains in big tech stocks, including Netflix, Amazon, and Apple, pushing the NASDAQ 100 index higher. NASDAQ 100 up now by 0.2%. Netflix up 2.9%. Amazon up 1%. Apple up by 1.6%. Investors and traders coming back from a long holiday weekend to worries that the economic recovery is faltering. Less than 2 weeks before a proposed rollout of booster shots, the U.S. is enmeshed in a debate over whether an extra dose is really necessary for most people. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
For the immunocompromised, it certainly is a 3-shot vaccine. For those that are healthy, I think this is something that we're all debating. We don't see strong clinical data that prompt the need for a third dose at the 6-month or 8-month or on the September 20th interval. And that's why there's been pushback on the Biden administration's plan to do this, because there isn't data that's showing, yes, antibody levels decline, but that confers a risk that's intolerable or that can be ameliorated by getting a vaccine.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, Pfizer shares, they're down 0.5%. BioNTech, its ADRs up 3.7%. AstraZeneca's ADRs down 0.7%. Moderna out of Cambridge up 5%. Johnson & Johnson down 1.6%. Again, recapping stocks mix, NASDAQ at a record, S&P down 12, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. This is Bloomberg. Is this from a TV show?
In a manner of speaking. You're correct that it's a TV theme. A theme for what?
So, an action show.
Well, there's action, but I don't think it's the kind of action you're talking about.
All right. I see many people are typing. Oh! Oh, man, you hit my 2 weak points. March Madness?
That it is.
This is, I can, we're in a soundproof booth, but I can still hear all the engineers and producers in behind the glass laughing at me.
Well, there you go, Tim. What can I say? I didn't even ask for an artist or a title. I made it easy. Anyway.
Nancy Lyons has some great knowledge that she's dropping right now in the chat. She's saying there's an anniversary today.
Okay.
For March Madness.
You tell me what the anniversary is then. I figured, we're just starting college football season. So thinking about college basketball is a ways off.
All right. You tell me.
Well, I'll tell you why I picked it. How's that?
It sounds good.
The chart headline says Final Four. The headline on the Bloomberg terminal also says Elite Eight. And you have both in March Madness. In any case, it's all about, 8 months into the year, the S&P 500 up more than 20%. What happens when the index moves that much in so short a time span for the rest of the year? You know, it's something that Stephen Sutmeyer over at Bank of America touched on the other day. And I went through the numbers. I mean, he was kind of optimistic about things. I mean, given the track record, I kind of went through and said, huh? Because I looked specifically at the 10 years before this year. And you can go all the way back to 1929 as it happens, when the S&P 500 rose more than 20% in the first 8 months of the year. It's pretty much a mixed bag. In fact, to the point where if you look at an arithmetic average, so add all the percentages up, divided by 10, you get a loss of a bit more than 2% for September through December. If instead you take sort of the midpoint of the range, kind of, what you call the median, you end up with a gain of a little bit more than 2%. So looking at this, it's like you can't necessarily find a direction based on historical performance.
The range is wild here. As you write, the final 4 months of those years brought everything from a 21% advance to a 32% decline. That's a range.
That's right. And that 32% decline, by the way, was 1929.
Okay.
Oh, and 1987 was another one of these years. So it's definitely skewing the equation. You go back to the mid-50s, that's where you saw that 21% gain. So the market's kind of a bit all over the place. If you want anything that may be more meaningful historically, you know, Keith Lerner over at Truist Wealth, he looked at, going back to 1980, S&P 500 performance during the year, and he pointed out in a report the other day, there are only 2 years in which the index failed to decline 5% from a high. And of course, we haven't had one all year. And that was 1995 and 2017. So if you want to take it from that perspective, maybe we're due for a bit of a retreat. If you want to know more, folks, send me an email. I'll get you the chart, the explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
But perhaps not maybe a 1987 or 1929 retreat.
Yeah,
maybe.
Well, perhaps not. Okay. I mean, those are the extremes, for sure.
Hey, Dave, give us your stock of the day.
Oh, I can do that for you. It's Zoma. And that's spelled Xoma. That's not only the company name, but also the ticker. This is a biotech type company. It's been around for 35 years. Doesn't have much in the way of revenue, though, and doesn't have all that much in the way of analyst coverage either, so every call counts. And you saw Wedbush cut its rating on the stock to the equivalent of hold from buy, in other words, to neutral from outperform, when they reduced their 12-month share price estimate by almost half to $22. So you put that all together, you say Zoma, ticker XOMA, down more than 11% at the moment. And I checked my trusty Bloomberg terminal. Its stock's headed for its biggest drop since March of last year. You remember that bear market?
I certainly do remember that. Dave, it's down more than 40% year to date.
Yeah, more of the same.
All right. Well, I'm being told by Nancy Lyons that ESPN was established on September 7th, 1979 in Bristol, Connecticut.
Well, so there you go.
There it is. Thank you, Nancy Lyons. Well, speaking of Nancy Lyons, she is standing by for a check the latest world and national news. Hey there, Nancy. Thank you for all the help, Nancy.
Sure, I'm trying. President Biden is surveying the flood damage from the remnants of Hurricane Ida, stopping in Manville, New Jersey, where he said the destruction was incredible.
What I'm surprised by is that in what otherwise you would not assume could generate a water height that went up in some cases almost to the windows of these homes.
Biden says every part of the country has been hit by extreme weather, and he says it's time to act. House committees are working to act on President Biden's ambitious economic proposals with the goal of reporting progress next week. Bloomberg's Irv Chapman reports.
Democrats still have to find common ground with a deadline for passing a transportation bill by the end of this month. Henrietta Trace, economic policy director of the firm Vita Partners, said in a Bloomberg interview.
They don't necessarily have the votes for the human infrastructure components, and they do have the votes for the $550 billion in additional infrastructure aid. So it's no surprise that they moved on the hard infrastructure bill first, and that bill is going to pass in the House, I think, with something like 95% odds.
Trace said negotiating the companion bill could take the rest of the year, with the president in the end getting half a loaf. In Washington, Irv Chapman, Bloomberg Radio.
The Taliban have announced a caretaker cabinet that looks familiar, with top posts going to Taliban personalities who dominated the 20-year battle against the U.S.-led coalition and its Afghan government allies. there are no non-Taliban leaders in the lineup, which had been a big demand of the international community. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Ed Ludlow is back with me. I'm Tim Stenbeck, live in the Bloomberg Interactive Brokers studio. Ed, just for those listening, Ed had to take a little break to go talk about Apple and Ford on Bloomberg TV, but we allow that stuff here, Ed, so welcome back. I want to talk a little bit about Rocket Lab, the former SPAC Rocket Lab, adding $2.3 billion over a 4-day surge. This is among the most read on the Bloomberg terminal. It's a competitor with SpaceX, Ed, and between the two of us, there's probably very few people who have more of a shared love for rockets than the two of us.
Yeah, I was going to say, get me on the show. We don't even talk about space. Come on.
Well, here we are.
Yeah, well, I mean, Rocket Lab is really fascinating because I very recently I started looking into them. You know, they are the second most active US-based launcher. Actually, the company was founded in New Zealand and has launched sites in New Zealand as well as in the US. And they are a very different beast to SpaceX in that the rocket, which, you know, our YouTube audience can see on the screen, it's much more lightweight, for want of a better expression. It carries a much smaller mass payload than, say, SpaceX could do with its Falcon 9. It's going after really the affordability model, but it's really doing well. 21 launches to date, 105 satellites put into orbit, and now investors are paying attention. But a lot of that activity coming from retail investors and a lot of mentions on Wall Street bets.
Right, so that's what's so interesting about this. The stock hitting a record high on Tuesday, soaring past March's record after the rocket maker saw its popularity pick up on Reddit last week after positive posts in the Wall Street Bets forum. So I think it's fair to say, I don't want to make any to the moon puns here, but I think that's fair to say for this. Is this a meme stock now?
I mean, if you were in the CEO seat, would you want it to be a meme stock? I mean, he's the guy that really preaches prudence.
Yeah.
He wants, you know, long-term investors. This is a long way from being a mass volume sales company. You may get a little bit nervous.
I think the hard part about being a meme stock, and we haven't seen this totally play out, but what goes up must come down, again with the rocket references. But I do think that that's one of the concerns that some of these CEOs have if they do find themselves in the Wall Street bet targets. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Big news out of Ford. Ford Motor is hiring the head of Apple's car project away from the iPhone maker. Ford says it's bringing on Doug Field as its Chief Advanced Technology and Embedded Systems Officer. Ford shares up now by 0.6%. Apple shares, they are higher by 1.7%. Stocks slipping from near records. Traders returning from a long weekend to worries that the economic recovery is faltering. Both the Dow and the S&P are in retreat. The S&P down 15 now, a drop of 0.3%. The Dow is down 280, a drop of 0.8%, while NASDAQ is up 17, a gain of 0.1%. 10-year yield, 1.37%. Spot gold down 1.6%, $17.94 the ounce. And West Texas Intermediate crude down 1.3%, $68.39 a barrel. Again, recapping, stocks trading mix. NASDAQ's at a record. NASDAQ up 0.1%. S&P down 14, a drop now of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is the drive to the close on the first day of this shortened trading week, just over 10 minutes away from the market close. And we are seeing a little bit of red across the screen. The Dow down by a little more than 0.7%. The S&P 500 lower by 0.3%. The NASDAQ higher by just 0.1%. Let's get into it with Dave Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. $9.8 billion in assets under management. David, it's great to have you back on the show. I want to start just broadly in today's trade. What is the message that the market is sending here?
Well, I think there are some growth concerns here. I think we're still trading in the wake of that weak August jobs report that we heard on Friday. People are digesting that. But what I think is also a little off-putting today is normally when you have growth concerns, interest rates are falling. Here today, we have interest rates rising, which is a little odd. And so there's that word, that scary word from the 1970s is popping up, stagflation.
Don't say it.
Exactly, where sluggish growth and higher rates, that is not a great combination. I think it's premature to get too concerned. Remember, NASDAQ's at a record today. S&P and Dow are very close to record, so let's not get carried away. But I think that's what people are focusing on.
Okay, so what is the market? What is the signal that the bond market is sending, though, with yields moving higher?
Well, so what we saw in August was less jobs than were expected that were actually created, but we saw hourly wages jump sharply, much worse, about 0.6% just in the month of August alone. That's about 4.3% annualized, and that's well above what the Fed has been targeting, and so I think there is that whiff of inflation there, which was not accompanied by people rushing into that labor force. And so I think that's very concerning here. Of course, we're still seeing the chip shortage affecting the auto industry and others, terrible supply chain disruption, too, which is pushing prices up. So, on the one hand, the Fed is probably going to be cautious here to start any kind of taper because the job numbers are not where they want. On the other hand, with wages starting to rise, they've got to stay vigilant, and so that's what's perplexing the market today.
David, that seems to be the debate. Yields rising. The consensus seems to be that if growth comes, the Fed is patient, does not pull the trigger early, then yields continue to rise. At the same time today, you have big tech outperforming. So what happens to those stocks with stretched valuations if we do get that prophecy, that forecast comes true coming out of the pandemic?
Well, so a lot of the stressed valuations, quite frankly, are just in those top 5 stocks, which make about 23% of the market. And quite frankly, the growth prospects for companies like Microsoft, Amazon, Alphabet, Apple are really quite strong. So they're probably going to be all right. But the real concern is for the rank and file, your industrials, your cyclicals, your dividend payers, those that would benefit from infrastructure payments. If growth weakens, interest rates go up, that's not a great combination for the rest of the market. And that's what we're going to have to watch very carefully.
Yeah, a lot of focus on the Fed right now and those mega cap tech stocks here in the US. But this seems to be like a really global week. Reading this morning, a lot of focus on the ECB this Thursday, also looking towards Australia, New Zealand, South Korea. How do you view the global economy right now and asset prices moving forward reflected of that?
Well, in some ways, we like the global economy from an investment point of view. Here's why. Certainly in Europe, the percentage of vaccination is actually higher than many parts of the United States. That's a big positive, while valuations are much lower. And, of course, interest rates there are even lower than they are here, negative in many cases. And so I think that's going to continue to drive some money into risk assets like stocks. Now, Asia is a tricky situation. Of course, the Chinese stocks sold off because of concerns that the Chinese government was really raising regulations, and there was, questions as to whether capitalism would survive and all that kind of stuff. There we're actually kind of optimistic as to the outlook, because at the end of the day, although China talks tough, I don't see how they become a real, genuine world power if they don't have a genuine world-class private capitalist system. So there, we're seeing some stocks move up today, and there we're kind of optimistic.
Well, one person who's certainly not optimistic about that is George Soros. We talked earlier about his op-ed in today's Wall Street Journal. David, I want to talk about the stocks that you're bullish on. Let's start with Anheuser-Busch. What's going on?
Yeah, so absolutely. So here is one of the top 5 consumer product stocks in the world. They're by far the largest beer maker. Is something like 15. They have 15 of the top 20 brands worldwide. So the stock was over 80, about 80 in June. Right now it's below 60. So you got a 25% markdown in a company where you can make fun of Bud here in this country, but the fact of the matter is they have the best distribution network worldwide, and sometimes that makes a difference in terms of profitability. And of course, other things I think are temporary. There is a growth concern on hard seltzer, which was proclaimed by Boston Beer, Sam, and I think that's weighed on the beer stocks here. There's also some concern about the delay in the reopening trade. Quite frankly, you're going to consume your beer either off at the bar or in the home, but it's far more profitable if you use the former at the bar. And so I think you've got an opportunity to buy a world-class company at about 25% off. Of course, they own 2/3 of Ambev in Latin America, which has just a total lock on the beverage distribution system down there. So we think here's a world-class company on sale. Snap it up. And if you're really concerned about growth, I think a beer company is something that won't be as sensitive to the vagaries of the GDP numbers.
David, interesting to see Exxon on the top picks list. Talk me through that one.
So we have a situation here is we're all convinced, and we need to go green. The problem is investors are going green faster in terms of how they're handling their portfolio than how consumers can go green. So you have a situation where people like myself are not going to be able to switch off the natural gas to heat our homes in the ensuing winters or trade in our cars fast enough in order to meet those objectives. So I think we're still going to be needing lots of fossil fuel. And of course, Exxon being the largest in the world actually benefits when capital is starved and taken away from the smaller companies. And so I think ultimately energy prices will go higher in this interim here. Exxon with close to 6% dividend, as I mentioned, totally integrated from upstream to downstream chemical operations, is well positioned to take advantage of this interim period when oil still has a role.
Hey, David, we only have 20 seconds left, but I want you to make your case for Wells Fargo, another contrarian bet that was under pressure last week due to regulatory concern.
Well, interestingly, with bond prices going up today, one of the few sectors that's doing well are the financials because they benefit from higher rates because that governs the price of their best-known product. So we like the banks. And Wells Fargo has, we think, one of the best franchises coast to coast, focusing on the middle market.
Right.
And I think once they can get that asset cap lifted off of them, the stock could return to where it was January 2018, above 60.
All right, David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. We are going to have to leave it there. Thank you so much for joining us on Bloomberg Business Week Radio. Just a couple minutes away from the close of trading on this Tuesday, September 7th. The Dow, the S&P 500, both lower. The NASDAQ, though, trying to eke out a little bit of a gain. It's still green, but there are a couple minutes left. Coming up next, it's Bloomberg Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rigg, Shonali Bassick in for Caroline Hyde, counting it down to the closing bell. Here to help take us beyond the bell, our global simulcast team. We're joined right now by Tim Stenovic, and in for Carol Masser, Ed Ludlow, EV Whisperer, joining us, bringing together our Bloomberg
wearing a
television,
tie.
radio, and YouTube audiences. Tim not wearing a tie, Ed wearing a tie, worlds colliding. What's going on? Markets down.
Market's down, and the NASDAQ really trying to eke out some sort of gain at the end of the day. But I think the real story is told in the number of advancers and decliners. For every one stock that's up in the S&P 500, there are 4 down. So it really speaks to the breadth of the decline that we're seeing. Magnitude is not huge, but still a broad-based decline, Ed.
Yeah, look, we're all surprised that yields are rising after that jobs report from last week, but the theory seems to be that if there's patience, the Fed doesn't go early, then we will see rates rise. The question, the debate, seems to be to what extent? Taylor.
Yeah, that's interesting, Ed, because there were some questions, and Romaine, we were having this debate with Jason Brady of Thornburg of why yields are going higher off at the back of that report, but how much of this is perhaps maybe a slowdown in this taper, and so you're letting inflation and some of those inflationary pressures perhaps maybe run higher than we thought.
Yeah, and I think whenever we talk about this, I think you have to point people to the yield curve, that steepening yield curve, 5-year 30 right now at about 115. It got up to about 117, but if you pull that chart back and you look at it over a 6-month period or even a 1-year period, you realize, okay, we got a long way to go before we get back to any sort of right sizing in yields here. About 13 seconds till we get the closing bells here in New York. Look, people are clapping, bells are ringing. The Dow Jones Industrial Average looks like it's going to finish the day down by about 64 points here. Not on a day like today. You're down 0.7% on the Dow Jones Industrial Average. Everyone pays attention to that. The S&P 500, that's down about 0.3% or 15 points. We should point out, still camped out near its record high. The NASDAQ actually going to close today at a record high, believe it or not. It's only up about 0.1%, up about 11 points, 15,374. That's the NASDAQ composite we're talking about. And the Russell 2000, that's your underperformer of the day. It's down by about 0.7%. In fact, a lot of that cyclical trade that we've been talking about, that's really been the big laggard here. Not only is the Russell down about 0.7%, but the mid caps, the S&P 400 down about 1% on the day.
Yeah, we just spoke to Dave Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management, and he made the point that on a day like today, you really have to step back and just think context here and say, hey, wait a second, look at the volume that we had on Friday. It was low. Traders seem to still be digesting the jobs report that we got that day. And wait a second, let's not get ahead of ourselves, he says. We're seeing a record high on the NASDAQ, and we're really close to record highs on the Dow and the S&P 500, Taylor.
Tim, let's take a look at the context of which we do the individual sector level before we get to the individual movers. For our radio audience, as we do this, the sector winners and the sector losers. And I hate to say it, but there is a lot of red, even in the sector winners. But there are a few standouts, some of which are tech and media. Of course, those are up about 1%. How much of that is some of the apples, some of that defensive trade coming on? And autos are up there as well. We do this for you, Ed, because autos are up 2%. How much of that is some of the moves? And you nailed it on the story with the likes of Ford and Tesla, you name it. We go down to some of the individual losers as well, and it's sort of a broad base here. You could call it a rotation out of some of the bond proxies, real estate, utilities, food and beverage, capital goods. Those are off anywhere, Ed, from 1.2 to 2%.
Yeah, I'm looking at the big gainers. Actually on the NASDAQ 100 and feeling the love with Match.com, announced Friday, being included in the S&P 500, of course, marrying up those investors, institutionals that have to buy the stock. Yeah, I know, I'll give you that one. Also looking at Moderna is down earlier in the session, of course. Dr. Fauci saying that a delay could mean that Moderna doesn't feature in that round of boosters. Pfizer go first, but the stock coming back, ending higher in the day. And then Netflix, 8th straight day of games. There's no real sort of hard news around this other than Seinfeld's coming, guys. I don't know if you're ready for Seinfeld. I certainly am. Okay. I feel like I missed out. But Evercore out with the holiday weekend survey saying that this is front and center for a lot of consumers right now, Tim.
That's like 30 Are they bringing back Sanford and Son?
And there was the new street high.
Can I just point out before Tim, you get all gloomy with the decliners here. We should point out that you had more than 100 stocks, at least in the big cap universe here, actually hit 52-week highs today, including Netflix and Apple. Now there you go. There's your red on the screen. Take us down.
I'll take it down. Well, Boeing shares under pressure today. This coming off of a couple bits of news, including the news that Ryanair has ended the negotiations with Boeing on a major follow-on order for the 737 MAX. This after they failed to agree on pricing. Boeing shares down 1.8%. Also, the news from Dow Jones over the weekend that the 787 Dreamliner is likely going to remain halted at least until late October. That certainly didn't help at all. But off the session lows to finish down 1.8%. PPG Industries also down 3.4%. It withdrew its 2021 financial guidance. This as supply chain disruptions drag on sales and higher raw material costs hurt profit. The company did say it increased prices about 5% this quarter, but it expects 2022 sales to be strong when the supply chain pressures actually ease. Coinbase, we got to talk about Coinbase down 4.1%. Under pressure on the day that we see that Bitcoin is under pressure and other cryptocurrencies are under pressure. At the same time, the company did report earlier that some transaction on its platforms are either, quote, delayed or canceled at elevated rates, Romaine.
108 stocks hitting 52-week highs. 5 hitting 52-week lows here. So that gives us Hormel Foods and Boston Beer, Taylor.
Size and scope is
value
add.
Romaine. That's value add, man.
Bostic,
you don't get that on the European.
Denali is value add with crypto, which I know that we want to touch on. In the meantime, let me just quickly diverge us and take us back to the yield market, Tim, because this really does highlight where some of the movement was today. You're up 4 or 5 basis points across the curve to an 82, a 137, and a 199. So how much are we breaking through some of the key technical levels on the 10-year and approaching now, finally, again, at 2% on the 30-year? And Shanali, this really brings up this sort of theme of inflation, higher yields, rotation, and a lot of the technicals when you think about supply coming into the market.
Right, and if you think a lot of the market moves were already priced in, Taylor, I've got to point out that the VIX, while nobody was looking, rose more than 8% today.
I have a question, though, and I don't know, this is an open question to everyone here, but I mean, with the yields rising, how much of that has to just do with some of the short-term issues with the supply coming in and just the knee-jerk reaction to that jobs report? I mean, is this really sustainable?
In our conversations all day, Romaine, a lot of this has been a lot of talk around the taper timing, the belief that that will come sooner, but you're right, there is that added pressure that people are not talking about as much.
Yeah, and look, it's also the concerns about inflationary pressure. I mean, like we saw from PPG Industries today. We know that the Fed is really only concerned about the jobs numbers, and they were such a miss for the last month. And there's not too much data that the Fed is actually going to get in the coming weeks before that September meeting, Ed.
Yeah, look, we're all surprised about one data point driving yields higher Monday, one shaky data point about the recovery. But if you read across Wall Street notes, it's not just one data point that makes an outlook. You look at that forecast cut from Goldman, they're picking out consumers as well. So many different things to watch for, and that's why the calendar is so important for the rest of this week.
All right, we've got to talk about another story here, and this was a story everyone was talking about this morning, the commentary by George Soros, basically criticizing BlackRock's sort of embrace of China, this idea here that there are a lot of risks out there on the table with China. BlackRock says those risks are opportunities. Soros says you have to be crazy to continue sort of moving down this pathway, and he actually went as far to talk about you're putting clients' money at risk. Ed, you've got a tie on. What do you think?
Well, look, this is also about opportunity. He makes it seem as if there's nowhere to go in China. If you look at venture capital flows, record levels going into Chinese robotics firms, Chinese semiconductors. Look at the MSCI Asia Pacific, IT versus communications. The money's being pulled out of stocks like Tencent, NetEase because of these concerns. But it is going somewhere else because we know that Xi has this very big focus on industrializing the economy, and that brings with it opportunity for investors.
Really interesting comments that we're getting from veteran EM fund manager Mark Mobius. Take a listen and let's react on the other side.
I've been pretty positive on the measures that China have been taking because It means that they're moving more towards fairer regulations, trying to create a level playing field. So in some ways, these measures by China is making it safer for investors, including foreign investors. So I don't see where George Soros is coming from in this regard.
And Shanali, I mean, really interesting comments when you talk about, I think, what fair regulatory practices, and yet some of the headline risk that some people aren't going as far to say totally uninvestable, but you have to be very careful in that market.
Very careful, but we can't take back the fact that so many of the world's billionaires are based there. There's huge money managers, sovereign wealth type companies, insurance companies that are ingrained with Wall Street.
Yeah, and I mean, I guess this has to do a lot, too, with how conservative of an investor you are. Obviously, Mobius is a guy who sort of, cut his teeth, basically going into places that the rest of investors were sort of scared to go. And obviously, BlackRock, they'll be fine, right? I'm pretty sure BlackRock.
Yeah, I'm not concerned about them. But it does remind me of what Cathie Wood said last week about her investment in China and the way that she sees an opportunity, especially in those second-tier and third-tier cities and companies that serve those second- and third-tier cities as an opportunity for growth, considering that she is trying to level the playing field. Guys, we're going to have to leave it there. It's going to do it for our cross-platform coverage for today. We will be back again tomorrow at the same time, same place on Bloomberg Radio, on YouTube, and on Bloomberg Television.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic joined by Ed Ludlow in the Bloomberg Interactive Brokers studio in New York. Ed joining me from the West Coast. Let's check how the trading day ended up. The Dow finishing the day down more than 0.7%. The S&P 500 finishing the day down more than 0.3%. The NASDAQ just higher by 0.07%, Ed. Looks like we're still having a little bit of trouble getting Ed back. That's what happens when we do work coast to coast. We'll work to get Ed back in just a couple of minutes. And in just a few minutes, we are, of course, waiting to hear from President Biden, who is touring the damage on the East Coast from Hurricane Ida. In addition to that, we are going to be hearing from Jonathan Nee, a professor at Columbia Business School. All that and more coming up in the next hour. This is Bloomberg Radio. Let's get a check of the latest world and national news. Nancy Lyons is standing by for us in D.C. Hey there, Nancy.
Hey, Tim. Texas Governor Greg Abbott has signed a controversial voting bill into law today. He signed the bill surrounded by supporters and lawmakers in Tyler, Texas. Abbott says he thinks this Texas law will be replicated.
Other states are looking for a paradigm of what is a good approach to make sure that everybody who wants to vote is going to have the opportunity to do so. This is that type of bill.
Supporters say the bill expands early voting and allows people to take off work to vote. But critics say the bill also restricts mail-in voting, bans 24-hour and drive-through voting, and gives more access to partisan poll watchers. Well, the U.S. has reached a vaccination milestone. Bloomberg's Nathan Hager has more from Washington.
A White House official says 75% of U.S. adults have received at least one dose of COVID vaccine. Still, there's little let up to the Delta wave. About 100,000 people in this country are in the hospital with COVID. Gigi Granval with the Johns Hopkins Bloomberg School of Public Health says the vast majority of those are unvaccinated.
For people who are vaccinated, the risks of breakthrough infections are more along the lines of 1 in 5,000, possibly 1 in 10,000 if they live in a vaccinated area.
President Biden will announce his plan to combat the Delta wave on Thursday. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Biden is touring storm damage in New Jersey and New York today, focusing on climate change and saying he is thinking about all the families that suffered losses. He says better rebuilding is needed to deal with future storms. He cites his own $1 trillion plan now pending in Congress. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy. Tim Stenovic live in the Bloomberg Interactive Brokers studio in New York. Ed Ludlow coming to you live from the San Francisco office, Bloomberg's West Coast correspondent. Ed Ludlow. Ed, among the most read on the Bloomberg terminal this afternoon is a story from Dow Jones all about how Wall Street cannot get enough fixer-upper houses. Wall Street has made a mountain of money, and I'm reading directly from Ryan December's article here. Available at house flippers and selling move-in ready rehabs has rarely been easier. The challenge, though, is is finding beat-up and out-of-date properties that can be renovated and resold for a profit, Ed.
So there's two things that seem to be happening here. One, competition around the country is fierce. I know anecdotally here in California, it is fierce. You have people coming in, cash buyers, offering way, way over asking. But on these fixer-uppers, there aren't any. You know, this is something that you go to market with, usually in an auction from, I guess, you know, foreclosures, moratoriums, things like that. And you go to auction and they're readily available. Yeah. But for one reason or another, they're not.
It's been a really, really, well, perhaps part of that has to do with the way that the U.S. government has pumped stimulus, so people haven't been losing their homes at the same rate that during previous economic downturns they have, which, you know, I think a lot of people would argue is a very good thing about the system. One thing that I think a lot about, though, is the way that my friends and colleagues are thinking about where they're going to live, where they're going to raise their families. And I was just talking to a friend about this over the weekend. He bid on another house. He's looking to move and buy his first house. He got outbid by $100,000, Ed, in cash.
Oof. It's severe. The other part of this story is flip loans, right? I won't give away my age, but in the 2008 financial crisis, I was a younger man than I am now. But a flip loan, super high yield loan, you pay it back very quickly. When you hear about the lengths people are going to secure a home, that rings alarm bells, right? Like, you think that is a market to keep an eye on when supply is so constrained, when people are so fiercely competing for a home.
I think a lot of questions that people have include right now, how much longer is this going to go on? And if interest rates aren't going to rise, then perhaps a long time, because low interest rates, that means higher housing prices. This is Bloomberg Radio, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A record for NASDAQ down day for both the Dow and the S&P 500 index. Traders returned from the long weekend to worries that the economic recovery is faltering. S&P down 15, a drop of 0.3%. The Dow down 269, a drop of 0.7%. NASDAQ up 10, again a record there, up today by just about 0.1%. 10-year yield 1.36%. We did see the price of gold declining. Spot gold down 1.6%, $17.94 the ounce. And West Texas Intermediate crude down 1.3%, $68.37 a barrel. Ford Motor is hiring the head of Apple's car project away from the iPhone maker. Earnings after the closing bell. Coupa Software shares up by 12% in post-market trading after it forecast revenues for the third quarter and full year that beat the average analyst estimates. Again, recapping, stocks did decline today with the S&P down 15, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, the apparel company Lands' End reported earnings last week, and for the second quarter, revenue came in at $384.1 million. That was an increase from 23.1% in the second quarter of fiscal 2020 and an increase of 28.8% from the second quarter of fiscal 2019. The company's CEO, Jerome Griffith, joins us now. He's joining us on the phone from Long Island, New York. Jerome, it's so great to have you on the show. How are you?
I'm good, thank you. Thanks a lot for having me.
Yeah, thanks so much for joining us. Hey, I want to talk a little bit about the challenges that you see, especially when it comes to the supply chain and how you're thinking about manufacturing right now. Give us the idea of the changes that you've had to make over the last 18 months as you've weathered this pandemic.
Well, even prior to the pandemic, one of the things we wanted to do was to sort of spread the risk. We have been producing about between 42 and 45% of our products out of China up going into 2018. We began to expand that out into other countries so that we weren't really dependent so much on one country at all. What's happened to us over the course of the last, let's say, year to year and a half is that products getting into the States have started to slow down dramatically, and costs have really risen. Not just costs on shipping, but costs on raw materials. So you see cotton costs, and we do a lot of cotton, rising pretty significantly. But then you look at just the cost of shipping things from any country here, whereas containers 3 years ago were costing around $4,000 a container. The last 6 months, they've been up in the $12,000 to $15,000 range, and I've heard quotes as high as $25,000 for a container. And the same things happen with air shipping. Not that we ship a lot by air, but those costs have been going up as well. So, we will continue to look at expanding our network to make sure that we have a little bit more options than just going to 1, 2, or 3 different places in order to get products made and shipped.
Jerome, it's such a pleasure to have you with us. I love speaking to the retailers because you have such a lens into what's going on in our US and global economy. Supply chain, one thing. I want to talk a little bit about the labor market. How are Lands' End dealing with a pretty tight labor market? I mean, how are you staffing stores, facilities? You guys seem to be seeing some growth now in e-commerce. What is the priority for hiring?
Well, e-commerce really runs out of our corporate office, and that's 95% of our business. So that's been running along relatively well for the last few years. Our core businesses are U.S. direct e-commerce business, and then if you add on the international businesses and the B2B businesses, which we do online, it creates quite a large annual volume. What's happening with these businesses is we've been able to hire people because we're an interesting company, and the company's also doing well. So that tends to attract people. Where we struggle somewhat is just logistically how we ship goods out to customers. We are based in Wisconsin. We have 3 major facilities there, and we're a major employer in southern Wisconsin. What you've seen with the labor market as of the last 6 to 9 months is people aren't working as much. So it's been very difficult to entice people. We've given 2 raises so far this year. We've put on peak incentives for people to come into work, and we've had people working, overtime just to get the goods out the door. We have just made it through our back to school peak. which actually worked out okay for us. And we'll be going into another hiring phase. And it'll be determined, whether the people that have been getting unemployment and staying home are going to be ready to come back to work because then unemployment stops.
Do you think they will be?
Today in most places. I think so, and I hope so. But I have learned in the last year that I don't know.
Jerome, when you say you've had to raise wages twice, what are we talking about here? Where are they right now?
Depends on your average. We've raised them through between 3% and 4% in May, and another 1.5% just this past month. And obviously, starting salaries are over $15. So we've been doing the right thing by the market, and the market really dictates what you need to do for the people that have been with you for a long time, because we're a 58-year-old company. We've had people that have worked for us for 20, 25, 30, 35 years, and very loyal employees, and you want to make sure that they're happy.
Jerome, I'm a Brit acclimatizing to life in the United States, so I kind of asked this hesitantly, but should we talk about the holiday season,
Ed,
which
you're
is
doing a good job. You're becoming
fast
American.
approaching? Everyone keeps telling
great.
me fast approaching the holiday season. How's it looking from your perspective?
I think the holiday season is going to be dependent on getting goods here. This would be my 43rd Christmas since I graduated college, and everyone gets just a little bit harder. But what we think, and we've seen pretty good demand coming up until now. We haven't seen a huge slowdown in demand. We think demand's still going to be there, and every year, it ends up coming around because people always end up going out shopping for Christmas. I think the people that are going to win, and this is our mentality, are the people that service the customer. If you're servicing the customer, you'll win. Yes, maybe your cost might be a bit higher, but as long as you can service the customer and keep them happy and keep them coming back, you'll continue to win as a brand.
How early do you want consumers to order from you for the holiday season?
People start now, and we saw it last year, and we saw it for back to school this year. People started ordering early and back to school, and they started ordering more. And my sense is the same thing's going to happen this year: is that people will shop early and they'll want to buy more because they've had pent-up demand and they have good savings right now, and people will want to spend. I think what's going on in the supply chain and what's going on with getting the goods from the manufacturers to the containers to the ports, trucking the containers from the ports to the warehouses, and then ultimately getting it out to the consumer. That's going to be the tricky part for this year. And I think, the market knows it. Obviously, it was in the Wall Street Journal over the weekend,
right.
And it was in WWD last week talking about, what's going on in the industry.
Yeah.
It's a big deal. And people are working very hard to make sure that they can get product here.
Jerome Griffith, we're going to have to leave it there. CEO of Land's End, joining us on the phone from Long Island, New York. Shares of Land's End year-to-date at up more than 26%, outperforming the Russell 2000 and the S&P 500 as well. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec live in the Bloomberg Interactive Brokers Studio in New York. Ed Ludlow is filling in today for Carol Massar. He's joining me from San Francisco. He's West Coast correspondent for Bloomberg News and Bloomberg TV. In just a few minutes, we are going to speak with Jonathan Nee, professor of professional practice in media and technology at Columbia Business School. He's the author of The Platform Delusion, Who Wins and Who Loses in the Age of the Tech Titans. We're also standing by because we do expect President Biden to start speaking in just a few minutes, and we will bring that to you live from Queens, New York, when we do get it. In the meantime, a check of the trading day. Here's Charlie Pellet.
Hi, thank you very much. And here's what's going on. We have the Dow lower, S&P lower, NASDAQ, though, climbed to a record. Let's begin with the numbers. We'll give you the why in a moment here. NASDAQ up 10 today, higher by 0.1%, bringing its year-to-date gain to 19.2%. To put that in context, so far this year, we've got the S&P up by 20.3%. Today, the S&P fell 15, down 0.3. The Dow dropped 269, lower by 0.8%. 10-year down 15.30 seconds. 10-year yield 1.37%. Bottom line, stocks slipped from near records after traders returned from a long holiday weekend to worries that the economic recovery is faltering. Investors, meanwhile, are also digesting last Friday's jobs report and what it may mean for the Federal Reserve. David Dietz is senior portfolio strategist at PPAC Gladstone Bank, and he was a guest right here on Bloomberg Business Week.
On the one hand, the Fed is probably going to be cautious here to start any kind of taper because the job numbers are not where they want. On the other hand, with wages starting to rise, they've got to stay vigilant, and so that's what's perplexing the market today.
And again, 10-year yield 1.37%. Gold, spot gold down 1.6%, 17.93 the ounce. West Texas Intermediate crude down 1.3%, 68.38 a barrel. Coupa Software up 12% in post-market trading after it forecasts revenues for the third quarter and full year that beat the average analyst estimates. And big news in the automotive industry, a win for Detroit. Ford hiring the head of Apple's car project away from the iPhone maker. Ford shares up 0.5%, Apple up by 1.5%. Again, recapping, NASDAQ at a record up 0.1%, a retreat for the S&P down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. So, Ed, I'm looking through the best performers on the NASDAQ today. And perhaps no surprise, Apple, Amazon, Facebook, Netflix, and Alphabet, they're all among the top 10 best performers on the NASDAQ on a day then we saw pretty much a broad-based decline. Well, fortunately, we have Jonathan Nee, professor of professional practice in media and technology at Columbia Business School. He's the author of The Platform Delusion, Who Wins and Who Loses in the Age of Tech Titans. Tech Titans such as those that I just mentioned. He joins us on the phone from New York City. Professor Nee, it's great to have you on the show. So what is the secret to the success of these companies? What's the common thread that drives them together, that on a day like today, when we see a pretty broad-based decline, we see these companies still able to generate shareholder interest?
The short answer is there's not that much in common with them. Calling them platforms is a way that makes people feel comfortable that, well, they're all doing great, and that's the secret. But the reality is, many more platform businesses are unsuccessful than are successful. And when you look at the sources of strength of each of those businesses, they are quite different.
So let's start with Apple, for example, because there's a lot of news about Apple today, including the fact that on the 14th, we do expect the company to unveil hardware. And as my colleague Ed Ludlow, my co-host on the show, reported, one of the key people in the driverless car, or the Apple's car program, has been poached to go into Ford. Let's start with Apple. What's the secret to Apple?
Well, look, at the end of the day, Apple is a product company, and in fact, the vast majority of Apple's revenues has been since the death of Steve Jobs, has been from a single product, the iPhone.
Yeah.
That is still the case. That is still a majority of their revenues. But what makes it so phenomenally profitable is, in fact, the platform aspect of the business, which is really the App Store that has created an ecosystem of wild and extraordinary profitability. And the new leadership post-Jobs has done a phenomenal job of monetizing that ecosystem and monetizing that product. But you know what? In the world of products, eventually everything is a toaster. So if you don't come up with a new one, a radical new one, at some point you're not going to be able to wring out any more juice from that lemon. There's more to go. It's a phenomenally profitable and fantastic company, but eventually you've got to come up with something new, which is why you hear them throwing out crazy ideas like, well, I'm going to build a car. Healthcare is the next thing for Apple, which is fine in theory, but there's no evidence that those are things that Apple is very good at.
I'm looking at the mega cap tech stocks performance year to date, and it's interesting, year to date, not 1 year, not going through the duration of the pandemic, but Google sits top of the tree, right? 65% year to date gain. Bottom of the pile, Amazon, which always surprises a lot of people, Jonathan Nee. My question is, how do you assess this basket of mega cap tech companies as we come out of the pandemic? It seems they found some relevancy, some stickiness, but what is your main takeaway of the fortunes of those companies from COVID-19?
Well, in many cases, what you've seen is phenomena that were going to happen eventually being pulled forward. That is, people being willing, even your grandma's willing to buy groceries online when the alternative is getting a deadly virus. So it definitely helped a number in permanent ways, but it's very important with a number of companies, not just the big ones, to distinguish things that are pulled forward and permanent and things that basically gave companies that frankly didn't have much reason to survive an extra whiff of life, and it's not going to last after things normalize. That's not the case with any of those guys. All those guys are going to be here for a long time and are going to do well, and mostly it's a pull forward phenomena. But at least 2 of the 5 FANG companies are in incredibly competitive marketplaces. Netflix and Amazon, at least the part of Amazon that is in e-commerce. And those are both very low margin businesses, and they are both facing more competition than ever before.
Well, let's talk a little bit about that, Jonathan, because you write in The Platform Delusion, Who Wins and Who Loses in the Age of Tech Titans, that there is this myth that these companies are invincible, and that discourages competition. Where are these companies vulnerable?
Well, each one has got a different Achilles heel. Let's start with the strongest one. You said Google sits on top, and it sits on top for a reason. In search, it's a mind-blowing business. It is unlike many cases where people talk about learning and AI and big data, where actually in practice those things don't do very much for you. In the case of Google, it does do a lot for you. And the thing about Google that's so incredible is it keeps doing more and more as it gets more and more activity. So in search, it's a monster. But what's their Achilles heel? It's that in anything other than search, their track record is miserable. I mean, miserable. A great example of that is their attempt to compete with Amazon in AWS. It started trying to compete with AWS at exactly the same time as Microsoft did.
Right. Hey, Jonathan.
And it's about half as big.
Professor Nee, we unfortunately have to leave it there because President Biden is starting to speak. He's live in Queens, New York, making remarks on his administration's response to Hurricane Ida. Take a listen.
She say, who are you talking about? Look, folks, let me begin by saying I wish every American could walk down this alley with me to see and talk to the people who've been devastated. Just talk to them. None of them were shouting or complaining. Every one of them were thanking me as if it was something special. I mean it sincerely, that I was here, and hoped that we'd be able to do something. This is America, where I'm standing right now. These are the people, whether it's in Scranton or Claremont or anywhere around the world, the country, who built this country. And it's about time we step up. They're always the first ones that are hurt and the last ones that are helped. But that's not going to happen this time. The group I have standing with me, led by Chuck Schumer, and your Congresswoman, is this your district?
Grace Meng.
Oh, it's Grace's district. No, it's I want to thank her personally for her gumption, the way she's fought and hollered and fought so hard for all the people in this alley. I really mean it. Thank you, thank you, thank you. But that goes for everybody here. And look, folks, you know, I want to thank Governor for and Leader Schumer and Kristen, I should say Senator Gillibrand, and Congresswoman Ming and Maloney and Meeks and Mayor de Blasio for being here. You know, it's not, how can I say this? Sometimes some very bad things happen that have a tendency to bring out the best in a people and a country. And I think what people are seeing across this country, from the wildfires in California and the far west, which I'm heading to in a couple days, all the way to down in Louisiana in the Gulf, where I was a couple days ago, to New Jersey and Pennsylvania to a lesser extent, Delaware to a lesser extent, and New York, people are beginning to realize this is much, much bigger than anyone was willing to believe. And a whole segment of our population denying this thing called climate change.
Right.
But I really mean it. Sometimes my mother used to say, out of everything bad, something good will come if you look hard enough for it. Well, I think we've all seen, even the climate skeptics are seeing that this really does matter. And it's not just whether or not people who are just trying to get by in these homes, in these alleys here, working their butts off, do well. It's people in high towers along the shore who find that as this rain and all this change takes place in the groundwater, the buildings are actually beginning to tilt. 100-story buildings. This goes so far beyond what anybody's willing to speak to up to now. We just finished surveying some of the damage in the neighborhood here in Queens. And earlier today, we're in the Raritan Valley in New Jersey, which also got badly, badly hit. Walking these neighborhoods, meeting the families and the first responders, seeing how folks are doing after this destruction and pain and another devastating storm is an eye-opener. The people who stand on the other side of the fences who don't live there, who are yelling that we're talking about interfering with free enterprise by doing something about climate change, they don't live there. That's right. They don't live. They don't understand. And you know, last week, right here, in so many other communities, these waves crashed through the streets here, testing the aging infrastructure and taking lives. More lives were taken here than down in Louisiana. Let me say that again. Wow. They had over 20 inches of rain. They had 178 mile-an-hour winds, gusts, and more lives were taken here than down in Louisiana. And you know, you all saw the harrowing images of stories and families trapped in flooding basements and struggling to survive. Well, you didn't have to just go along this valley. Talk to the people. I'm sure the press has done that. My message to everyone grappling with this devastation is, we're here, we're not going home till this gets done. Well, I really mean that. We're not leaving. We're going to continue to shout as long as it takes to get real progress here. Folks, and we have to take some bold action now.
Yes.
To tackle the accelerating effects of climate. If we don't act now, I'm going to be heading as Chuck knows, as the senator knows, I'm going to be heading from here to Glasgow in Scotland for the COP meeting, which is all the nations of the world getting together to decide what we're going to do about climate change. And John Kerry, the former Secretary of State, is leading our effort putting together. We are determined that we are going to deal with climate change and have zero emissions, net emissions by 2050. By 2020, make sure all our electricity is zero emissions. We're going to be able to do these things, but we've got to move. We've got to move. And we've got to move the rest of the world. It's not just the United States of America. And so, folks, this summer alone, communities with over 100 million Americans, 100 Americans call home, have been struck by extreme weather. 1 in every 3 Americans has been victimized by severe weather. The hurricanes along the Gulf, the East Coast, up through this community. And I saw the human and physical costs firsthand, as I said, in Louisiana. But Governor, you called Phil Murphy, so many of the leading, Governor Murphy, so many leading with urgency and action are said, enough. And there's not a single request I'm aware of, there may be something, that we haven't signed off on. We haven't signed off yet. And here's the deal. The New York Fire Department, the New York Police Department, the Sanitation Department, and other first responders, they're leading with incredible courage. 2 linemen have been killed trying to make sure we have. And folks, the evidence is clear. Climate change poses an existential threat to our lives, to our economy, and the threat is here. It's not going to get any better. The question, can it get worse? We can stop it from getting worse. And when I talk about building back better, and Chuck is fighting for my program, our program on the Hill, when I talk about building back better, I mean you can't build to what it was before this last storm. You got to build better so if the storm occurred again, there would be no damage. There would be. But that's not going to stop us, though, because if we just do that, it's just going to get worse and worse and worse, because the storms are going to get worse and worse and worse. And so, folks, we got to listen to the scientists and the economists and the national security experts. They all tell us this is code red. The nation and the world are in peril. That's not hyperbole. That is a fact. They've been warning us the extreme weather would get more extreme over the decade, and we're living in real time now. Or we can look around the wreckage and the ruins and the heartbreak from so many communities to feel it. Just don't understand. You can feel it. You can taste it. You can see it. Precious lives lost in Louisiana, New Jersey, New York. Families living in shelters, subway stations flooded, decaying infrastructure, pushed beyond the limits. Lives and livelihoods interrupted once again. We're working closely with the governors and mayors and members of Congress and community leaders. On Sunday, I immediately approved the disaster declaration of Governor Hochul to rush federal assistance to where it was needed here. FEMA is working intensively with state and local officials, assessing the damage and mobilizing resources. One of the things I want to thank Chuck for as leader of the Senate. He has helped mobilize state, local, and federal. When they're all working together, that's when things happen positively. The Health and Human Services Secretary is working with the state to ensure folks on Medicare and Medicaid get the emergency care they needed. They're going to make sure it's equitable so that the hardest hit, including lower income folks, communities of color and the elderly, and the most vulnerable, get help and get it first. They are the ones in the greatest need. And there's much to be done, and we're working around the clock in all these critical needs and areas. Look, I say to anyone who can hear this or if this is broadcast, if you need help, please go to disasterassistance.gov or call 1-800-621-FEMA, 1-800-621-3362. We can get you help now. We can get you help now. And I know these disasters aren't going to stop. They're only going to come with more frequency and ferocity. And as I said, I'm working in Congress to pass 2 important pieces of legislation that this man here is honchoing through the Congress for me. The bipartisan plan to modernize our physical infrastructure, our roads, our bridges, our power transmission, our distribution lines. How many bridges I just went through in New Jersey that have been overflown by the river. The river's gone higher than the bridges, having done damage to them. My Build Back Better plan with key investments in to fight climate change, cutting emissions, and make things more resilient. Each dollar we invest, every dollar we raise, a city block by 2 feet, flood-proof power stations, sanitations, reduction in the buildup of kindling in our forest, installing electrical lines underground rather than overhead, saves us $6 for every single dollar we spend to do those things. Because the next time disaster strikes, the flood is contained, the fire doesn't spread as wisely, and power stays on. Not to mention those investments save lives, homes, and create good-paying union jobs.
Yay.
I hosted 56 heads of state in Washington. And I pointed out, we're talking about climate change. And I said, I think of one word when I think of climate change: jobs. Good paying jobs. Each of these things requires a good paying job, not $7 or $12 or $15, but $45, $50 an hour plus health care. That's what is needed. And so, folks, it will also, and Wall Street, not too far from here, acknowledges if we spend the money on these things, we're going to grow the economy.
Yes.
Increase employment. You know, the fire in Oregon sent smoke all the way to the Atlantic. A storm in the Gulf, as you've now figured out, can reverberate 10 states away. Supply chains and crop production get interrupted, driving up costs, devastating industries all over America. This is everybody's crisis. Yes. Everybody's crisis. And let me just say again, the fact is that the damage done on the West Coast, which I'll be heading to, they've already burned 5 million acres to the ground. That's bigger than the state of New Jersey, if I'm not mistaken. 5 million acres. And you see it by the smoke that ends up coming over the East Coast. Folks, we're all in this. It's about time we stop the regional fights and understand. Helping somebody make sure there's no fewer fires in the West warrants helping people in this alley make sure they're not flooded. And by the way, it's not just the flooding. I'll end with this. Not just the flooding. Flooding ends up overrunning sanitation systems. And it causes disease. And people get sick. And it's serious, serious business. So we got a lot of work to do. Again, it's good paying jobs. We can put the economy back on a path to real growth. But in the meantime, we're going to save a whole hell of a lot of people's lives, and we're going to save a whole hell of a lot of money. God bless you all. Let's get this done.
Mr. President, look at that nice kid with the American flag. Say hello.
Well, there you have President Biden delivering remarks on his administration's response to Hurricane Ida. He's doing that from Queens, New York. He's talking about the need to take climate change seriously and the need to create infrastructure that is adaptive to the changing climate of the planet, as well as making sure that the United States and the world do what it can do in order to move away from fossil fuels and stop emitting as many greenhouse gases as it does. Let's go now to Joe Matthew, who joins us from Washington, D.C. He's the host of Sound On. Joe, does this help the president sell his infrastructure plan?
Well, I don't know if this actual speech does, Tim, but the weather that we've seen recently may really help him make the case for climate change spending. Progressives have certainly been beating the drum, but when you see a storm like Ida, for instance, cover the eastern seaboard, This makes things feel much more urgent for a lot of folks, whether they're dealing with problems in their power grid, they've got the lights off, they're dealing with flooding, they're watching the coastline erode. These are all things that the president's talking about. So it was kind of a twofer here, right? It was, go visit the storm zone, but also use that to make the case for more infrastructure spending.
Joe, very quickly, he made the case for science. He said that the people whose houses have been destroyed care what the scientists think. Do you think this will go down well for the president before he gets on the road coming to California next week?
Well, that's a good question. These arguments land hard sometimes with conservative Republicans, but that really may not be who he was talking to. This is a president who needs to keep the Democratic caucus together, progressives and moderates. This is one issue most of them agree on.
Joe Matthew, host of Sound On. His show starts in just a couple of minutes. Be sure to stay tuned for that. As for us, here at Bloomberg Business Week, that wraps up our show. Join us again tomorrow, same time, same place. Ed Ludlow, live from San Francisco. Thank you so much for being my co-pilot today. I'm Tim Stenevec, and this is Bloomberg Radio.